JB here. Hope everyone's doing outstanding. Monday, June 30th, 9:03 a.m. on this fine morning. Talk really quick about the market, some names I'm looking at. Go from there. Welcome to the last day of the quarter, the first half of the year. What a pretty remarkable second quarter, and of course, first half of the year. It's been pretty remarkable. At start of April, we had the tariff. I don't even know if you want to call it the tariff tantrum, but had that big pull, Liberation Day, and boom, you thought, oh, this is the start of a huge market correction. The US dollar is going to lose its reserve currency status. Yeah, yields are rising. People are pulling out of US debt. These things spun so quickly. And then here we are on Friday, closing at all-time highs. Uh, all that's kind of, I wouldn't call it in the rearview mirror, but just remarkable that this all happened in a 3-month time frame. And you still have folks and a lot of stuff over the weekend. People kind of coming up with their own bull case. Is this just started? Is there a next leg for the bull market coming? Is this just a huge reversal bounce and we're going to have more downside as tariffs cause inflation? We're going to start seeing all those impacts of the tariffs that were supposed to happen already. We're going to start seeing them at the end of the year. it's, I keep being optimistic, right? A glass half full kind of person. So, and that's how I'll continue to look at the market until I see otherwise. But for now, I would think 620 on the SPY this week. I've been talking about 620 for the last week or so. I think that's probably the first target. Maybe we'll get some overshoot, right? Blue sky breakout, typically new highs, beget new highs. And then 609.50 is any crazy headlines, but it's like what headlines could really hit the market this week? We don't have much in the way. There's not much way into data. No Powell. No. It's all just gonna be about the T's, right? The tariffs and the tax bill. So you already have haggling over the tax bill. I don't know who knows what gets pulled back. Sounds like the subsidies and stuff for solar might be back on the table. So will be interesting, just those headlines. And then Friday, it's funny, we have the Canada headlines, right? Oh my gosh, US is seizing trade talks with Canada. We're going to announce new tariffs in 7 days. Markets dip for a little bit and then boom, it bounces. And it seems like these headline driven events, especially around the trade war, tariffs, geopolitical, so everything has the dips are more short lived now. Where back in April, you had prolonged dips, a day, right? Multiple days. Now it's like an hour or a half hour, and then markets are back to highs. So data remains strong, earnings remain strong. Inflation has been, I guess, the word would be tepid. It hasn't been at the pace that everybody was thinking tariffs were going to impact. And I think as long as that continues, I think that bodes well into the summer. So also, Ryan Dietrich always posts great stuff. Some historicals, how the S&P is after being down 7% at the start of the year, and you look at the example I put in watch list. Let's see if I can post it here. I think there's like 8 or 9 instances here, and majority of the time in the green, solid 10-11% average with no recession models. So you take out the recession models, but there are two of those events had recessions, and despite that, the markets were down like 7%, 15%. So good historicals anyway. And then some nice articles in the Wall Street Journal this morning. It's like shares of economically resilient companies such as utilities, which investors often buy when they're nervous about growth, have outpaced the benchmark S&P by 5%, while stocks that tend to rise when the economy is booming, like consumer discretionary sector and small caps, are lagging behind. Small caps continue to be like the anomaly, right? And I'll pull up that chart in a second, but it's funny. Then it says, that's not traditional bull market leadership. This is not the time to pile into equities because you're kind of in a very broken, fragile freight environment. So that's comments from that article by David Lundgren, chief market strategist at some place. And as far as like, what was this person saying in April at the April lows? Probably even worse than what they're saying now. And here we are, 30% plus on the NASDAQ since those lows. What is the perfect bull market, right? To me, it's almost like there's an opportunity now because you take a look at the small caps and they are not even close to their November levels. So anyway, so this week, 609.50 to 620 market closed half session on Thursday, closed on Friday. So just remember that. And just some other things to look at. A couple of weeks ago was all about yields. Now it's the U.S. dollar, right? That's the new headline. But you're trying to always keep it in context of things. And this is the monthly chart on the U.S. dollar. I'm not saying you go back, of course, in the whole since 1980 or whatever. Of course, there's periods of history where it's been substantially lower against the other basket of currencies, but you pull the lens out and you're like, okay, that doesn't look as bad as the media as it's being hyped. Like, oh my gosh, U.S. dollar is just getting destroyed, and it is. Of course, there's other countries where their currency has substantially improved versus the US dollar. And I remember back, 2012, 2013, the euro was at 130 against the US dollar forever. And nobody's like, oh, it's never going to parity, never going to parity. And then the US dollar and the euro went down to $1. That's 30% less than where it was. So uh, then you look, oh my gosh, the euro's gain against the US dollar because of, the NATO spending or because of the tariffs or whatever. But it's like, ah, all right, so that's kind of the overall market. Just quick on some individual names, so I don't want to rant too much on the overall stuff here. Obviously, Roku up here at 88 bucks. Hopefully, I can lock some of my 95s in today. They were close to a double on Friday. Close them out to cover costs, and then I'm going to go out and get some August. Call me crazy. I know premiums are expensive. I might look at 115s or 120s. Just get some premium builds into earnings. I think it's going to break over 90 bucks. If that happens, the 115s, 120s will gain substantial premium. Still have the 100s too. So hopefully gets over 90, and then it's a run and gun scenario, 90, 95, and maybe back up to 100 pre-earnings, and I'll continue to ride that one. So that's Roku, really like that setup. SERV Robotics held that 200-day moving. I wouldn't say held because it dipped below it on last Wednesday. Nice bounce Thursday and Friday, held the gains, and here it is gapping higher again here this morning. Take a look at what happened in May. Off that 200-day moving average, it ran from like 11 all the way up to 14 in a very short time frame. I think the same thing's happening here. And then hopefully, if it breaks out 14, off to the races to 17. Lots of blue space here and blue sky over 14, all the way up to that gap fill. Okay, so that's that. That's SERV Robotics. And now JOBY here this morning. And JOBY, I still have the July freebies, which are going to be solidly green here this morning, depending what the what the market does, but it's back over 10 bucks. It was actually 950, 960 when I'm doing a watch list. It already had news at 8 in the morning that they did the first historic trip in Saudi Arabia, I think it was. And it was kind of like the market didn't really do much. And I posted on FinTwit, and boom, the thing just took off. 960, 980, 10 bucks. It's up here, 1020, bouncing around. You look at the chart, and it's like every time JOBY has had these big runs, and it was a $5 stock back in April, but at the end of last year it was a double-digit stock. It seems like every time it has a big run, it sells off. And this time, it seems like it's different. Higher highs, higher lows. So it's kind of like holding up, and I got to think 11 bucks is coming. So I might look, and August 12s look interesting, but obviously it'll be a lot more expensive at the open. I might look for August 13s, somewhere in there, but really like the JOBY setup here. And then, the regulatory environment, the executive order that was passed for drones and the vertical takeoff and landing vehicles in regards to some things that might be easier for companies to come to market. So I think it's just a whole environment for it to really start to take off. So that's JOBY. Then quick other names. Dell, disappointing end to the week, but we're still up 4%. Slow and steady to the upside. Hopefully you get another big breakout like we had on Thursday. And then at some point, maybe I'll look some more strikes to play for that move to 139. That's Dell. Iron Reddit here this week. Last week, it was in the green for the week, but not what it's been doing the last couple weeks, where it's had massive moves. So some consolidation. So big move, consolidations from a big move up to 100, consolidation when it hit 120, then back up into the 140s the previous week and a half, and then consolidation, and then probably the bigger leg to the upside. It's this whole big story, right? Where everybody's used to, you just typed in search in Google, and then Google would put up the links that you click on, right? And they're saying the majority of them were Reddit, and all these advertisers, all these companies are losing clicks, especially news publications, because people don't click them anymore. The AI gives the synopsis or the summary, and that's it. And I don't think that's the case. Well, with a Reddit, I don't think that's the case, because Reddit's kind of like a platform that it's like you go to it when you see the stuff, and once you've gone to it, then you're using it to get your information or be part of a community or what have you. So I think it's a totally different kind of story than a lot of the bears are making it out to be. So real like the Reddit setup here. I was saying before, once it breaks out, when it was in the 100s, then 110s, it was going to go to 140, 150, 160. I think it's headed to 160 in a matter of a week or two. So I'll continue to look for opportunities to trade that one. PayPal's up here at 74 here in the pre-market. Another name, it just boggles my mind how it's not substantially higher. I don't know if some of it's because of the competitive landscape, where there's more companies competing to disrupt the way folks transact and the stable coins and all that fun stuff. But premium is holding up on the calls. I wish they would gain some more. If it breaks over 75 today, I might look for some more strikes there. And then FedEx, I did those lottos last week, was able to close them in, but then gave it all back and didn't get the rest out. But it looks like if it gets over 232, it's off to the races. So not a name I've traditionally traded, but just how it's come down from its previous couple earnings, and then the bounce off of earnings on last week when it reported. I think it's setting up to get to 232, then possibly 235, 240. So don't be surprised if I add some strikes there. Um, and I think that's it. The small caps, right? I mean, to me, like they haven't, they're nowhere near where they were at the end of last year. And then you look at the backdrop, it's like, why are caps struggling? Typically, lower rate environments are good for companies that have lots of debt, or emerging companies that, high growth companies that are very sensitive to rates. And then it's the other side is the US dollar. Like, is the weaker US dollar good for small caps or bad for small caps? And I don't think there's any, and I was trying to do research, there's no like true correlation between the US dollar and small caps, because some small cap companies do a lot of business abroad. So when you're doing business abroad, the less expensive dollar makes your products more attractive, right? But then on the flip side, if you're a small cap company and you have a lot of input costs from abroad, like your supplies and all that fun stuff that go into making your product, then your costs go up because your dollar doesn't get the supplies by a function of US dollar being down 10% this year. Your product is 10% more expensive, and then you have the tariffs. So it's tough to kind of like figure out exactly what the catalyst is, but to me, I think if yields continue to go down, I think that'll be the next catalyst for small caps. Anyway, let's have a great day, folks. I'll be back on audio later. Rock and roll.